Good day, everyone. You're welcome to this week's Business and Investment Tips Program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on the April 2023 inflation rate and MPC meeting expectations. Last week, the National Bureau of Statistics, (NBS), released the April 2023 inflation report. The report showed a sustained increase in Nigeria's inflation rate. Headline inflation for April came in at 22.22% year-on-year from 22.04% in March 2023. This is alarming as it is the highest year-on-year inflation since the rebasing of the Consumer Price Index inflation in 2009. The 12-month average stood at 20.82%. On a month-on-month basis, prices rose 1.91% in December, the highest month-on-month increase since January 2012, from 1.86% in the previous month. As expected, food inflation, the major driver of inflation in Nigeria, was 24.61% for April 2023, higher than the 24.45% recorded in March 2023. On a monthly basis, food prices rose at a faster pace at 2.13% from 2.07% in March 2023. This can be attributed to increases in price of oil and fats, bread and cereal, fish and potatoes, as well as the Easter festive activities. Similarly, core inflation, which includes energy prices, deteriorated by 0.28 percentage points year-on-year, rising to 20.14% in April 2023 from 19.86% in March 2023. The year-on-year FX devaluation/depreciation is one of the major drivers of core inflation, as this directly feeds into prices of petroleum products, especially diesel and gas, which are deregulated, vehicle spare parts, and importation of medical equipment. Ahead of the MPC, the third Monetary Policy Committee (MPC) meeting for 2023 will commence today. Recall that at the last meeting in March, the MPC voted 10-1 to raise the benchmark rate by 50 basis points to 18%, the sixth rate increase in the last 12 months. Given the persistent rise in the inflation rate, the stance of the MPC to rein in inflation using the MPR, we envisage a further hike in the monetary policy rate by about 50 basis points from 18% to 18.5% by the MPC. In our view, the MPR has not had a significant impact on fixed income yields due to other factors like system liquidity, money supply, and the tenor of the instruments. However, higher interest rates tend to reduce the pace of currency depreciation, exchange rate effects, which lowers the dollar costs of raw materials and finance costs. For most SMEs that accessed loans at a floating rate, subject to change based on MPR, this would increase their finance costs, which may impact on their profitability. Lastly, interest on savings accounts would improve, pegged at 30% of MPR, which is positive for savers. Investment strategies to hedge against inflation. The continued wide gap between inflation and returns on the market has left investors with poor returns. Although fixed income yields have remained elevated, we do not foresee a convergence strong enough to push real returns to the positive territory. Investors should tilt towards investing in commercial papers, albeit with good ratings, relating to treasury bills to earn better returns. Additionally, investment in dollar-denominated assets will also provide a hedge against inflation due to the expected depreciation of the naira. For investors with high-risk appetites and long-term horizons, investment in stocks with consistent and high dividend returns can also be explored. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed.